Hi traders, this is Chris Buss with Traders Profit Compass with your pre-election weekend profit navigator for November 1st. Okay guys, I hope you're having a good weekend. I hope you enjoyed your extra hours worth of sleep this morning. Let's get into it. Okay, this week in earnings, of course we've got the election here front and center, so I don't know how these are going to react. We've got an interesting few on Monday. We've got PayPal, we've got Solar Edge, and then on Tuesday, Wayfair, Ferrari, let's see what else we got here, Airlines, Spirit Air, blah, 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 blah. Not too much here. I'm going to be looking at Qualcomm, might be interesting, on Wednesday, and then Alibaba, Roku, Square on Thursday, Peloton as well. Trade Desk dropped some tech names here on Thursday. But here's the deal. You know, on Monday and Tuesday, prior to the election, you're going to have some, individual stock movements. Depending on what happens, post-election, that may dominate any of these individual moves depending on what the overall market reaction may be. So anyhow, we can watch these as the week unfolds, but I think the election news and market reaction are going to kind of dominate the conversation and the flow in the market. Now, I want to take a couple looks at where we sit prior to the election. 538, that Nate Silver polling firm, has Biden at an 89% chance of victory. Just anecdotally, it seems like it would be closer than that. I mean, these guys get paid to be right. Of course, they were all wrong in 2016, so there's always that element of doubt in the in these prognostications. 89% is way up there, so we'll see. I was reading in a couple of different places that if you're looking for an election night tell, it may be Florida and North Carolina, and here's the reason why. Both are battleground states, but also both have procedures in place that they're already counting their mail-in pre-election ballots. So at the end of Tuesday night voting, they may already have or should have a real good handle on their mail-in ballots, and hence will have a much more secure call on their state's outcome versus Michigan and Pennsylvania and some of these other battleground states that by law they're not allowed to start counting till the day of the election on Tuesday. So you can imagine that they may not be done with that count of the mail-in ballots till days after the Tuesday the Tuesday night elections. So it may be very difficult for the national news and all the pollsters to come up with a solid call on who won unless it's just a complete blowout. And what this article was saying is, if Trump were to win North Carolina and Florida, then he's still in the game. If he were to lose both, nearly impossible to win in the Electoral College, not having either Florida and North Carolina. If he were to win one and not the other, it would want to be Florida. It has more Electoral College votes than North Carolina, but he really needs two. So that's what they're saying there. So on Tuesday night, we can look towards Florida and North Carolina for potential tells on how Trump is doing versus Biden and vice versa. I reposted this Bank of America research note on potential scenarios of a Biden win coupled with a Republican Senate, a blue wave, and then Trump winning and the Republicans holding the Senate, or the Democrats taking hold of the Senate. And they put it in terms of how much fiscal stimulus to expect. And a couple things I want to point out. If Biden wins and there's a Democratic Senate, don't forget there's a lame duck session till the end of the year where the Republicans will still have the votes in place till the new administration is sworn in. So if they want to be, a stick in the mud, you may not see this flood of liquidity until Q1 of next year, and who knows what that effect may have on the markets. Another scenario that's not considered here in a blue wave is all these people with embedded gains are going to be staring down the barrel of a increased capital gains tax, increased corporate tax, increased personal tax. So what effect would that have on selling towards the end of the year? We don't know that. But I think this is a very good thumbnail on, the amount of liquidity to expect in different scenarios, and something to consider once we figure out what the lay of the land is after the election. BNP Paribas has this graph out showing that, getting this vol spike into the election is not anything out of the norm. In fact, we saw this, back in 2016. So where we're at on volatility is not outside of what we've seen in the past. This is a graph from Bill Luby over at VIX, and I think it's VIX and More. He's a big volatility guy and has done some studies. This is a composite VIX performance heading into an election and then coming out of the election. And we've been talking about this in our regular daily notes about the expected vol crush after the election, and you can see it here where all the volatility just comes out of the system. And really, this is what has made directional trading in front of the election just so difficult. We're sitting at a VIX around, let's say, 38. So you think there's going to be a rip after the election, or you think there's going to be a nosedive. So you take a directional bet. You're buying those options at a volatility of 38, which makes them relatively expensive. And so you have the election, and let's say you're right. There's a relief rally. Your calls are going to lose a lot of value because the VIX is going to implode. And same thing on the downside. Although it may not be as bad, if there was a big equity rug pull, volatility may hold in there. But still, there's a lot of risk in having that directional view. And I shared with you during the week a lot of, big boy trades of buying VIX puts, VIX put spreads, VIX 1x2 put spreads out in December, where they're counting on this phenomenon where the VIX just absolutely collapses, which would make those trades pay. And at the end of the day, I basically decided it's above my pay grade. I'm not Joe volatility trader. I don't have the expertise of knowing how these instruments will behave, in a finely tuned way. And so what I've decided to do is just protect capital, go into the event relatively flat, or completely flat, to be honest with you. I don't have anything on at the moment. And try to read the lay of the land after the election. And I think we'll know relatively quickly what's going on. So let's get into it, and we'll try to figure it out together. I found it very interesting that over the last week, our put to call extremometer has basically been trapped in a very small range. We had a Monday rug pull. They were buying calls, and then the next day they were buying puts. But compared to these extremes, it's been muted. But there really has not been any extreme put buying. So as a whole, the market is not scared. There hasn't been a lot of put buying, even though the market had a down week. No one seems to be particularly worried about it. Commodities, bad week at the office. We saw this run up, and we've had several bouts in this period between July and recently, where commodities have been involved in this reinflation trade, and those moves have ultimately been faded. So I've got this consolidation box here between, say, 155 on the CRB index and 142.50. It's down at the bottom of the box. If we were to see a breakdown in this, in the weeks ahead, then we're probably looking at, honestly, a deflationary impulse. If it holds here and grinds back to the top of the box, that may be a point where we can take advantage of some of these commodity trades, copper, oil, ag input stocks, for a run back up to 155 and then a potential breakout. But you can see, for those of you that don't follow commodities very closely, this 155 was a level that went all the way back to 1973. And, 50 years later, we're below it and have been below it, going on almost a year. So that just tells you how depressed commodity prices are. And up here, I've got the price relative between the CRB and SPY, and you can see the persistent downtrend. If, and this is a big if we ever saw this relative breakout right here, then there would be a, and this would be the signal that commodities are outperforming equities. That's when you've got to get on board. That may signal high inflation. Commodities do well in rising inflation environments, because remember, it takes a certain amount of dollars to buy a commodity, and if inflation is going on, it's going to take more dollars to buy the same amount of commodities. So commodities do well in inflationary environments, and if we get that, then you may see this breakout here, and that would be something certainly to pay attention to. And that can be actually can be a multi-year trade. So given this big multi-year downtrend, downtrends don't always last forever. So on a breakout above 155, and certainly here on this price relative chart, we want to be aware of that. Copper has been on a run and has pulled back this week. I think as long as it holds $3 here, the bulls are fine. If it loses $3 and starts grinding lower, that will make it look like a false breakout. And you want to watch RSI up here on a break below this trend line, and also for a PPO bear cross, which would favor a breakdown here. Oil, with all the spiking COVID cases across the world, had a big risk off week, lost 10% and is now pressing 35. It's right at a key level at 35. If it breaks below, then you're probably going to see a fast move into the low 30s and even potentially, high 20s. We've got to watch that real carefully. But if it holds here, and then all of a sudden there's a big risk on moment after the election, we could get a move back up to this 42.5, and that's a big percentage move. So those of you that are motivated, I know we've got several in the trading room that are on top of the oil trade. That's going to be, we're at a key spot. You either take it short on a breakdown or you stay long if it holds, because there's really no in between here at 35. Bitcoin. I got some notations in the blog. Is it the new safe haven? It was up 7% this week. Gold was down. TLT was down. Silver was down. All the traditional safe haven assets did poorly, but Bitcoin was up 7%. And you can see here on the weekly chart that above 16, it opens up a runway for price to come back at those, make a run at those 2017 highs, back up here at 22,000 or whatever it was, and on the Bitcoin scale, that would be up in the 28, 27 range. So $10, $11, $12 higher from here. And who knows, once it gets into that mode, where it may end up. So, bottom line, regardless of if you buy into the whole Bitcoin narrative, doesn't make any difference. We're traders. And if it takes out this prior high, it means it's a buy. And you set your stop just below 16 and you see where price takes you. And if you think about it, this may be the perfect time. Just from a trading perspective, all these people that were back here got trapped. And then, there was the capitulation moment down here. At 3,000 or 3,500, whatever it was. And then it's been in consolidation ever since. We may be catching it at just the right time to get that unidirectional move once all this congestion has been cleared out on a breakout. Now it may consolidate here for a while. All I'm saying is on a breakout, it's a technical buy, and that will have cleared out a ton of resistance and give us an open shot towards the 2017 highs. So that's definitely a trade you want to put on the radar. And that doesn't have anything to do with who's elected, any of that kind of stuff. It's an uncorrelated asset. It's been doing what it wants to do, not tied to anything else. So I think that's a good one to watch. The oscillators. Here's the Mcclellan oscillator for the Nasdaq. You can see that it's not quite below 60, which would put it, or below negative 60, which would put it in the marginally oversold area. And you can see on NYMO as well, basically the same posture here at minus 60. Now here's the thing. On a run-of-the-mill, week in July, nothing going on, if we had this posture, the risk reward of being short is low. This oscillator stands undefeated in terms of the rubber band getting stretched in one direction or another. It is going to snap back. It's just depends on when. You can see all the snapbacks here that have happened, 62, 65, 78, 59, 65, 66. Now in March, yeah, it went 140. It can go low, but the chances of being short here and banking on a move to minus 140 are low. But here's the deal. We've got the event risk. So who knows what may happen at the back half of the week, or if chaos ensues, or whatever can happen. I think those probabilities are low, but in terms of banking on these oscillators to gauge our positioning, normally right here you'd be scaling out of all your shorts and getting long. But that's kind of hard to do with the election right in front of us. So, I think they're useful to know where we're at, because next week, if there's a flush move, just know that that rubber band is getting stretched to a higher and higher degree. And then the chances of a flashback rip the other way are greatly increased. I did not like seeing this chart on transports, the weekly transport chart. We've had the rip off of the March low, but look what's happened this week. Bad failure. We broke trend on the RSI. We've got PPO poised for a bear cross. We've got a massive impulsive break of this trend line and slammed back to this key support level at 11,000 that you can see for years marked a ceiling. So now we've broken out and back tested it. Okay, fine. Does that mean, breakout, back test, and go higher? Or breakout, failed back test like we had in SPY and QQQ, where we break below and then make an impulse move lower? So watch 11,000 this week, and if there's a weekly close below 11,000 on transports, that's a big red flag. The good news is we've got the weekly 40 EMA coming in at around 10.3, so that may provide some support, but at that point we're on the wrong side of the chart. We're below 11,000. PPO will have put in the bear cross, and this will be breaking below 50. And at that point, like I said, you're on the wrong side of the chart, and you got to be looking for breakdowns, not breakouts. And here is an interesting thing on my price relative. We had the plunge, and then we had the breakout here. where price relative broke out against SPY and went on its run, and you can see that it has hit downtrend resistance from all the way back in here in 2018 on the way down. And now if it were to roll over here, relative strength will have broken down. So we got to watch transports really closely in the next couple weeks to see if it can hold this 11,000 level. Let's take a look at the VIX. We've had a series of higher lows, and now this week we put in a higher high, taking out this you'll remember at the September equity low we had a high of 38, and now we've got a fresh high of 41 this week. So the way I look at it for post-election, to my eye, 35 looks like a pivot point. If after the election VIX breaks below 35, and certainly if it breaks below 30 or even 27, you're probably looking at a rip in equities. If VIX holds in there and holds 35, I think that would be net bearish for equities. It doesn't necessarily mean, some kind of a plunge, but if everybody's expecting a vol crush and it doesn't come, meaning you don't really get the breakdown, you don't get the collapse in VIX, that means something else is going on. And as long as 35 holds, I think you've got to be a VIX bull. Look for higher VIX if 35 holds, and certainly if VIX were to break out above 45, very bearish for equities in that kind of scenario. We're probably looking at, some kind of advanced liquidity event. And that doesn't have to come in one day, but if there's some kind of post-election turbulence, controversy, riots, those are all low probability events. But if they happen and you see a VIX break out above 45, that spells real trouble. Here's the broadening top that we've been watching for months and months and months. A lot of technicians, Twitter guys are calling this a double top. And now price has pulled away from the resistance level of the broadening top and is coming down to test the September lows and this rising 40-week moving average right here at 3,200. That's a good line in the sand for you guys is SPY 320 or SPX 3,200. It's going to be a lot of eyes on that level this week, which marks the September low. If you were to see a break and close below, net bearish. If you were to see a net hold and a bounce, net bullish. Now, I wanted to mention that this formation is nothing to trade off of, in my opinion. It's a scenario that's out there. It may prove to be accurate. As we come down, I make a point in the notes on the blog. Notice this big area of value here where all the trades have taken place, the majority of the trades have taken place. And that level is begins at 3,015. I think I have that right. Yeah, 3,015, and goes down towards 2,600. If if, we get a breakdown back into this value range, remember then, once you break back down into a well-defined range from above, it targets the bottom of the range. And then that brings price down into this 2,700, 2,600. And then once you get 2/3 of the way back, then all of a sudden everybody's going to be talking about this broadening formation, and the target's the bottom of the channel down here at where Trump broke the thing out in 2016. So that's just something to keep in mind in the background. You don't short, in my opinion, based on this long-term chart, banking on 2100. That's more or less a disaster scenario. It may come true, but we'll have to take that week by week. Let's look at the indexes. Here is SPY Weekly. We held the September low. We actually didn't even test it. We got close. We got down to 322, I think, 323, and then recovered into the close on Friday. The box low is 320. You can see that right here. I don't have it marked in, but it's 320. The thing that did change this week was we got a break of the RSI trend. You can see it here. And we got a bear cross. And we had pointed out that in prior episodes of these weekly bear crosses, here and here, back here in February of 18, and then Q4 of 18, and even some of these little ones resulted in pullbacks. So now we've got a high level bear cross that has to be respected, and we thought we were going to get one here, and it put in a bull kiss. It reversed, but now the bear cross has been confirmed, and RSI is making a move towards the 50 level. It's got to hold here, and we could have one more week where we come back down, slightly undercut this September low, find support here at the 40-week average, and then turn up. That's certainly possible, but we have to be much more open to bearish outcomes than we were, up until this point, up until this prior week. Let's look at the daily. Here's the double top that I've got penciled in. We don't even have to bank on that as a given. I'm just putting it out there as a scenario. Let's look at the double top measured move. From the bottom to the double top, I have measured as basically 11%, 10.8%. So the double top measured move would be triggered on a break below the September low of 320, and I have that extended down 11%. That's 285. That would be a measured move target of a double top. Let's look at another scenario. We've been saying all along that once price broke back into this $20 trading range at 340, the target was the bottom of the box. Well, hello, we just got that. So now we're down at at the lower end of the box. On a break of 320, a measured move would be another $20. So 20 from 320 puts us at 300 as a measured move on a break below this prior trading range between 320 and 340. Notice this trend line I have here off the February high. came down, was resistance here, was support here, and now this trend line has not been tested here, right? We're not below yet. It comes in right about 316. Also, notice where the high volume over price bar is here on this value range. Comes in at 315. So, what about this scenario? We have a spike move lower after the election. Something happens and people flush it. There's a move lower. All these double top people would get a sell signal. All these people that are keying off of 320 for a box break get a sell signal. Everybody that got long at the September low are now underwater. Probably a ton of stops below 320. So these guys go on some stop clearing raid and spike it lower, maybe go down to 315, 314. Test this trend line, test this support area, and then rip it the other way after everybody just went short and got their stops cleaned out. I could see that happening as a scenario, and that's something I want to have somewhere in the back of my mind. I think this election thing sets up for a fake move. Just positioning, everything that's going on, I could see that. I sit in a dark room and think up these ideas. What would screw with the most people? What would screw with the most traders? And I'm thinking, everybody's got to have stops down here somewhere. All these people would be trapped. And on a break of 320, after last week, would that panic a bunch of people and make them want to get out, and then they rip it the other way? I'm wondering about that. So tomorrow, and also notice you got the 200 coming in here right at 315 as well. Actually, it's 317. So we got a ton of layers of support between 315 and 317. Keep that in mind. And what I'm thinking is, you know what? I may give up this couple bucks in here, not get short on this first break. If this thing's going to fail, it's going to fail down here. It's not going to fail to, 312 in reverse. Get short against the 200, get short against 315 after it closes there. Then you've got an anchor point to go back down, to these lower levels and not jump the gun here, at 319.50 and say, oh my God, we're breaking down. I'd rather have that as a strategy than, jumping the gun into a fake move. I think if we got a real move, it's going to last a while, and the fake move may last, half a day or a day, and then reverse and go the other way. That would especially be the case if there's a scenario where we don't know who won. The Electoral College is real close, and we're waiting on Pennsylvania and Michigan to count their votes, their pre-election votes, where you could get a risk-off impulse, and then, they come out Thursday with their vote totals, and then we know who won. Something like that may be a scenario for a fake move down, and then rip. Qs had a bad week, man. A couple weeks ago, we showed this bear cross, and when we got this bounce, we were saying, oh, was that a fake move? Well, it turned out it wasn't a fake move, because PPO never crossed back above, and now it's broken lower, and you can see RSI has broken as well. 260 sets up as a real key level on the Qs, and that's going to be a level to watch. That coincides with our $20 prior trading range. Let's look at the daily. Potential double top. I have that from September low up to the double top as 14.5%. A breakdown from 260 projects down to 225. A box break scenario where this is the $20 trading range, $20 from 260 is 240. So there's two targets for you on a breakdown. Notice though, just like we said a couple minutes ago, notice where the value range is. It comes in at 255. There's the potential there for that fake move that we just talked about. I have a trend line off of the February high. Notice this one's rising where SPY was declining, and this comes in at 270. So if 270 holds and bounces, we got a rally on our hands. If it breaks down and then 260 breaks, we've got this last line in the sand at 255, and that might be the zone of the stop raid, where you come down, you break 260, everybody panics, they pull the rug and then reverse it and go higher after that. Notice where the 200 comes in at 248. So we got a couple of levels there. We got 270, which is the middle of the box and the trend line. We've got 260, which marks the September low, and we've got 255, which marks the bottom end of value. And you know, if we started seeing closes below 255, and certainly a close below the 200, then you're looking at, you know, a deeper pullback. IWM. I didn't look at the actual percentage values, whether it outperformed or performed in line with SPY or QQQ, but the posture of the PPO is much different than in SPY and QQQ. Here RSI is still above 50, has broken trend but has maintained that level, and here PPO has yet to put in a bear cross. So I think it's an easier trade from that standpoint of just where the price lies. I think price has to recapture 155 to get truly back on track, and as long as it stays below 155, I think the target is the bottom of the box back down here towards 140, 142. Notice all the time that's been spent in that range. We had a fake breakout, bottom of the box. Fake breakout, bottom of the box. Fake breakout, odds favor the bottom of the box down here. And if price were to recapture 155 and close above, then it didn't work. Simple as that. The daily shows it really well here. we've got a trading range between 160 and 140. We just showed that on the weekly. I've got a midpoint line here at 150. I've also got a rising channel or wedge here where that support line comes in right at 150. To me, on the daily, it's a simple trade. On a break below 150, I think it comes back down here, fills this gap, tests the September low, and even possibly undercuts it here to 140. As long as 150 holds, then it's fine. If price rips after the election and you get an entry down here near 150, or there's a sell-off and a recapture on the way back up, you can get long against 150 and look for a run back up to 160, fill this gap, potentially break out, and then head towards that target that we had been hoping for of 167.50. Let's look at some FANG names just to wrap it up here. Some really concerning looks on FANG. Here's Apple, declining RSI with a break. Weekly bearish PPO. Lower high. Testing this triangle. Gotta hold 105. I mean, pure and simple, that's it. Gotta hold 105 this week. If it does, it stays alive. If it doesn't, it's coming down. You can see here also during this rip, almost no technical support here. And you would have a chance to save it at the 40-week EMA at 95. But if it loses 105, I think you can be short and take your chances. And I would not be shocked to come back here to 80 on Apple. I mean, especially, if you got short 105 and it came down here to the 40 week at 95, you still got a winning trade, right? You're $10 to the good. You could roll down your strikes to this point and then play for the final $15. Put that $10 in the bank and then start a new trade against the 50 and then shoot for 80, because there's nobody home here. Everybody who bought in here would realize that they're wrong. Everybody that bought the split, everybody that bought the dip, they would all be wrong, and they would be motivated to get out of their positions, and there's nobody home all the way back to this prior February high here at 80. So keep that in the crosshairs and never think something is impossible, because it always is. Amazon. Massive consolidation over a year and a half. 1600 or 1550 to 2050 for basically 2 years. Let's call it 2 years. Breakout. Fast move. Now consolidation since June between 3400 and 2900. 2900 was a back test of this level, and now it looks like it's coming in for yet another test at 2900. If it holds and there's a rip after the election, you got a great entry right here down towards 2900 with a stop just below, and with an eye back on 3400, which is $500 higher. If it breaks, your target is $500 lower, which puts it right back here at 2400 at the one and only high volume over price bar in this whole area. And if there's further trouble, all the way back here to 2050 to test the original breakout. But just like in the Apple example, if it doesn't hold 2900, all these people would have realized that they were wrong and they would be motivated to get out. And always keep in mind where this 40-week EMA comes in at 2700. That would be a place for it to hold, if it was going to hold on this move down, if this whole thing breaks down. But notice the posture, significant high-level PPO bear cross, and testing trendline support. Facebook, big triangle here. Horrible price action this week. You know, and really the up moves were a result from Snap and Pinterest. Both of those gave it some juice, and then once its earnings came out, they sold it. Bear cross on the PPO, declining momentum on RSI. I think your level is 260 here, which was tested on Friday and held. Once you lose 260, you're into this void again, and you've got your moving averages below to hold it up. I think there's a level here at 240 that would be potentially support on Facebook on a breakdown. Microsoft, you might be able to draw a little head and shoulders here. Doesn't really matter. To me, this September low and then the prior low before that at 196, 195 is your line. If you get that test and it holds, great long entry. If it breaks, then you're looking at a back test of this February high in this breakout level at 185-ish, 190 in there. I think 185-ish is your level here on the breakout. So that would be an area I'd look for a back test if it broke down. But like I said, we may get a flush down. You get a tag of 195, 196, and then they rip it. So don't jump the gun there. Have a plan in place and then execute it once you see the price action. And then lastly, Netflix. Real bad couple of days, man. Actually a few weeks. They sold the earnings. They brought it down. They had the price increase the other day. Had a $25 5-minute bar, and then they sold it the next day. So we are at the bottom of a $100 trading range between, for all intents and purposes, 580 and 480. If it breaks a $100 range, your technical target is $100 lower, which brings it right back to this 380 level, which was the both the high of 2019 and the February high as well. So that would be, you know, a technical target on a breakdown of this $100 range. So, and like always, support is support until it's not. So as long as that level holds, actually I think that level is more like 475, 465. You'll have to look on a daily chart because I think here we're below 480 already. So maybe that range is actually $110 or something like that. You can fine tune that on your daily chart. So let's do a quick recap of where we're at. I've taken the posture that I'm going to be wait and see. I don't feel comfortable trying to pile into a trade on VIX where I don't feel I have the confidence or the expertise to execute that on a finely balanced trade, because a lot of people have already figured that's what's going to happen, and I don't like the idea of just piling in a consensus trade. The market has a way of not letting people win on consensus trades. I'm gonna conserve capital. I will play or actively trade the indexes until then. Once we get the lay of the land, once we figure out if we're going to be ripping or cascading or neither, I think we can put on some much more intelligent trades, knowing where the VIX is heading, having the election behind us, and then we can focus on whether we're going to get a year-end rally, and we can have much more confidence in our technicals, because as much as I lean on the technicals, when you have an event risk, it can blow right. It's just like earnings. You can have all the technicals in the world, but if there's an event, you can blow through the technicals and they won't matter in that moment. So I don't want to presume that I'm going to guess right on which way it's going to go, and then we can set up some duration trades and individual trades on stocks that are either breaking out or breaking down in after the election. Watch the transports. That was a really important chart. Watch the commodities. If we get into an inflationary value cyclical trade, commodities may start to rip, and that's a trade you want to get on board on, that's going to last a lot longer than 3 weeks. If that breaks out on that relative chart that I showed you, commodities versus SPY, that's one where you could get on a bull train that could last months and months and months, if not years, if the tide were to turn. Also Bitcoin. It's on the threshold of breaking out and having a clear shot at much higher levels. If you've ignored it up until now, sit up taller in your chair, pay attention, figure out how you want to trade it, and have that 16 level marked in your platform. Let's leave it there. I hope you've had a good weekend. I really appreciate your time. I know you've got a lot of exciting things you could be doing over the weekend rather than listening to a long video. So I certainly appreciate it. I hope you found the content helpful. Thank you to all the new subscribers. I'm getting a few more every day. I really appreciate that. If you've got friends in your trading circle that may benefit, please pass a link along. I'd really appreciate that, and maybe it'll help them as well. Also, if you're new, check out the show notes where you'll find links to the blog site and how to register for all my content, where you'll get an email and an invite to the trading room, where you can hobnob with the rest of the traders. Got some sharp guys and girls in there that are working hard, trying to improve. We'd love to have you there. So let's wrap it up. Enjoy the rest of your weekend. We'll pick it up early tomorrow morning like we always do, and see how this election pans out. This has been Chris Butts with Traders Profit Compass. Talk to you next time.